Welcome, everyone. Let's look at the final capsule for AASB S1. We will look at the best practice for judgments, uncertainties, and errors. The nature of sustainability information means we often deal with less certainty, more estimation, and significant professional judgment compared to the traditional financial reporting. Transparent communication, honesty about unknowns, and commitment to correcting mistakes becomes the backbone of stakeholder trust. Now, why this matters? This is where transparent communication, honesty about the unknowns, and a commitment to correcting mistakes become the backbone of trust for your stakeholders. There are three critical pillars we should consider. One, judgments. Explaining your reasoning. Sustainability reporting requires applying expertise to the real world scenarios. Provide users with insights into the most significant judgments that have shaped your sustainability disclosures. The key judgment areas to disclose: identifying relevant risk and opportunities. Determining which sustainability related risk and opportunities could reasonably impact future prospects is really critical. Climate may dominate some industries, while social or governance risks are more pronounced in others. Choosing the right guidance. Selecting which standards, frameworks, and industry practices to apply from a range of possible sources shape the nature and comparability of reported information. Then comes assessing materiality. Determining what information should be disclosed based on its materiality to primary users' decisions requires significant professional judgment. Fourth, reassessing scope. Deciding if new events or environmental shift warrants reassessment of which risks and opportunities across the value chain are now in scope. Why this transparency matters. Disclosing significant judgment gives user transparency on where you have exercised discretion, the rationale behind your choices, and any limitations that may influence information provided. This directly supports faithful presentation. The second critical area: measurement uncertainty. Being open about the unknowns is really critical. Many sustainability metrics cannot be measured precisely, often depending on forecast, assumptions about future events, and sometimes incomplete or evolving data from complex value chain. What do we require from a disclosure perspective for high uncertainty? Firstly, identify and flag high uncertainty amounts. Highlight any reported figures subject to significant degree of measurement uncertainty, ensuring users understand which numbers should be interpreted with caution. Secondly, explain sources of uncertainty. Describe main causes: unpredictability of future events, reliance on external data, new measurement techniques, or challenging sourcing accurate supply data. Third, describe judgment and assumptions. Lay out main assumptions or methods used. If CGH emissions data is modeled rather than measured, explain how and why that approach was used. And finally, sensitivity analysis and change. Disclose sensitivity to assumption changes, expected timing of uncertainty resolution, and any significant changes from the past periods with rational. Now, here's a key insight: the use of reasonable estimate, even with high uncertainty, does not undermine disclosure usefulness. Focus on estimates requiring the most challenging or subjective judgments. Errors. This means correcting the record. No system is immune to errors, especially given the complexity and novelty of many sustainability disclosures. What matters is how an organization responds when an error is identified. Let's look at some of the requirements around error correction. Define prior period errors. Material omissions or misstatements in past disclosures from failure to use or misuse of reliable information that was available when disclosures were made. Second, restate comparatives. Wherever practical, correct material prior period errors by restating comparative figures for each affected prior period item. This is important for consistency. Disclose the nature of correction. Make clear what was the nature of error and the correction details for each period. If impractical to correct all periods, explain why and describe the correction approach. And finally, restate from the earliest date. If full effect cannot be determined for all prior period, restatement should be done from the earliest practical date to maintain integrity. Now, what are the core principles which we need to uphold? The three critical areas listed down here are the qualitative characteristics of high quality sustainability related to the financial information under AASB S1. First is faithful representation. User must trust that disclosures reflect reality, complete with all of its complexity and uncertainty, not just management hopes. The information should be verifiable. Clear explanation of judgments, assumption, and correction helps external users and auditors verify information and assess reliability. Third, trust building. Transparency about decisions, uncertainties, and correction builds stakeholders' trust and enhance sustainability reporting credibility. It's important that we embed integrity. This learning module is not just about compliance, it's about embedding integrity, humility, and professionalism in sustainability reporting. By carefully documenting judgments, honestly addressing uncertainties, and rigorously correcting errors, entities provide stakeholders with information that is truly useful, actionable, and trustworthy. Now, we have completed the five capsules for ASBS1, which would give you a strong understanding what the standard demands from the companies. In the upcoming videos, we'll look at some practical scenarios of how the disclosures should look, some basic internal controls, and lots of implementation tips. Thank you so much for joining. I'll see you guys soon.